Financial statements, fraud. The objective of this presentation is to show the importance and purpose of financial statements, the standards and governing bodies, the Arthur Andersen corruption situation, and the impact that the Arthur Andersen case had on the industry. Financial statements. There are three main financial statements: the balance sheet, the income statement, and the cash flow statement. Per Financial Accounting 11th edition, financial statements are prepared to report on financial and investing activities at the point in time and to summarize operating activities for the preceding period. Its financial statements and related disclosures inform us about the four major activities of a company: planning, financing, investing, and operating. The balance sheet. The balance sheet reports a company's assets, liabilities, and shareholders' equity. The income statement. The income statement reports how profitable a company was over a given reporting period. And the cash flow statement reports the cash generated as well as used during a specified time for the company. Standard governing bodies. Outside of a company's moral and ethical behaviors and need to do the right thing because it is the right thing to do, there are three major governing bodies: the Financial Accounting Standards Board, FASB, the Governmental Accounting Standards Board, the GASB, and the Financial Accounting Foundation, the FAF. On the FASB's website, it states that the purpose of the FASB and the GASB they're both charged with setting the highest quality standards through a process that is robust, comprehensive, and inclusive. The FAA management is responsible for providing a strategic counsel and services that support the work of the standard setting boards, and the FAA trustees are responsible for providing oversight and profiting an independent and effective standard setting process. Arthur Andersen. Arthur Andersen was one of the world's largest and most respected auditing firms. Arthur Andersen provided services in auditing, taxes, and consulting services. Arthur Andersen was founded back in 1913 and over time played a major role in helping to establish accounting practices. Arthur Andersen was considered one of the Big Five. In 2001, going into 2001, it had revenues of over $9 billion, more than 85,000 employees spread across 84 different countries. By the time 2001 was ending, Arthur Andersen was tied up in the Enron scandal, accused of falsifying and destroying records, and in 2002 was actually convicted of obstruction of justice. In 2005, that conviction was overturned, but by then the damage had already been done. A few of the theories as to why the company fell from grace is that they allowed their business models to overlap. The consulting and auditing portion of their business, the consulting was actually bringing in more revenue than the auditing, so when they did audit Enron, they basically turned a blind eye or looked the other way when red flags were present because they didn't want to rock the boat on the consulting portion of the business. That conflict of interest and turning a blind eye was also, once Enron was discovered, was found that they did the same or had the same practice or lack thereof with other firms that they were consulting and auditing for. Some of the major impacts from the Arthur Andersen / Enron fallout was that the Oversight Committee used to be the Public Oversight Board. Since then, it has been replaced by the FASB. There were several standards or acceptable accounting practices used. There are still a couple practices used, but the general standard is the general accounting practice. It also had a major impact on just the public's view of the accounting world and the company's books and records. That negative impact affected, and it was the start of the tech bubble that occurred. And that concludes the presentation on financial statements and fraud.